And welcome to another episode of Experts Speak. I'm Michael DeLon, and today I am talking with Mel Lieber. Mel, thanks for squeezing me in your calendar today.
A pleasure. I'm thrilled to be on your show, Michael.
Well, thank you. It's going to be a phenomenal conversation because Mel does something that I'm really passionate about, and I think every business owner needs to understand this. So we're gonna dive into it. Mel is the founder of a company called Premium Finance.
Finance Premiums.
Finance Premiums. I got that backwards. Finance Premiums. I got to highlight. Founder of
We're good.
Finance Premiums, and he works with business owners, high wealth individuals to help you create wealth and pass it on to the next generation. But I'm just going to let you tell them because I'm passionate about it, but I know you can explain because you're the expert, and that's why you're on Expert Speak. So, Mel, tell us, how did you get to do what you're doing today?
Okay, well, there's a little story behind that, as you would probably expect.
I love stories.
I grew up in a family that was like finance. You know, as like a 7-year-old, I would every day open that New York Times, look for the ticker symbols of the stocks that I thought were great stocks because I overheard my, father and brother talking about them.
Right.
And I just knew, and for some reason, math was just easy for me growing up. And I was just a numbers guy, a finance guy. That was the conversation around the dining room table. So when it came time for me to enter the business world, I had a high bar of entry, a high bar of where I needed to get to. My oldest brother has a hedge fund. My next brother is a day trader. My sister is a financial planner. And I'm like, okay, what do I do? Where do I come in? And I didn't, and I didn't want to just be like a salesman, just trying to like scream louder than the next guy and do the same thing as everybody else. So I took 6-7 months off and after school, and I took 6-7 months to just investigate and try to find what is the best investment out there. How could I really help people? What's something that is amazing that not so many people know about? And after research and going through many different types of financial products and concepts, I came across premium financing, and I'm like, bingo, that's it. And listen, I'm aggressive a little bit. I'm a little bit of an entrepreneur. So I went all in, jumped all in, and I asked every question. I really went under an expert to follow him around, so to speak. I kept on asking. And after I finished asking every question and getting the right answers, and then comparing it with other concepts and other financial products that are out there, I realized, bingo, I found my baby.
I got it. That's awesome. And how long ago was that you birthed your baby? How long you been in the business?
So I've been in the business for approximately 10 years.
Awesome. That's terrific because that's way longer than most people who have been in your business. And all right, so let's unpack it. So you found this thing called premium financing. What is it? How does it work? Who can use it? And what are the benefits? Let's just unpack this because as you and I talked before the podcast, my family, we use this concept in our family to build our wealth, our generational wealth. And I told you I'm setting up 3 to 4 generations in our family using this exact concept. So glad we got connected. But for those in our audience who don't really understand what we're talking about yet, tell them.
Okay.
What is this thing?
So I'm going to tell you with a 1-minute history about it, and then I'll show you how I like to uniquely apply it. Different than, the fish are swimming this way. I like going that way,
I love it. Okay.
So this is a concept that's been around for many years. It's been heavily used the last 20 years by the ultra high net worth people, 25, 30 years or so. These are people that needed, 10, 20, 50, $100 million, $1 billion life insurance policies to pay for their estate taxes. So we're talking about ultra high net worth people. And, these guys weren't in such a rush to pay the, $2, $3, $4 million a year premiums.
Right.
I could understand why. These people are making money. Their businesses were earning 10, 12%. Why do you want to take money out of the business and put it into an insurance policy that's going to earn 6, 7, 8%? It just wasn't worth it for them.
Yeah.
So the concept that was created, once again, been heavily used the last 30 years, but ultra high net worth is, instead of me taking the money out of my pocket to pay for that insurance policy, to pay for estate taxes, I am going to borrow some to all the money, depending on the structure. Let's call it 75% to 100% of the money I'm going to borrow from a bank, and I'm going to take that money, put it into the insurance policy, let it grow at 6, 7, 8% a year. And then at some later point down the road, I'll take the money out of the policy, I'll pay back the bank, and now I'm way, way ahead of the game. Just like when I invest in my business, I use the bank's money, I use the investors' money, I use other people's money because that's how you get rich. Yep. So too, they were doing that same concept with the insurance world, with insurance products. So that was what was going on for the last 25, 30 years. What I was just got into the market just when this concept was coming, just when it was a baby, was taking this idea and using it for, I wouldn't say exactly ordinary folks, but high earners, people that are, have a small business, people that make a couple $100,000 a year. So these people want to save for retirement. Now, when you just, it's hard to put $100,000 a year away for retirement. If you can only put away $30,000 a year, but you want to have major impact, so the idea is, well, let somebody put down $30,000. We can have a lender put in, let's say 3-to-1 leverage into that money that he's going to put in. So even though he's only putting in 30, we're going to have $120,000 invested for him. Some later time down the road, we'll take money out of the policy and pay back the lender. But the idea is you get much, much more money working for you. And just like those really wealthy people wanted access to other people's money to grow their funds, to pay for their estate taxes, so do people like me and you want our money to grow to be able to have the retirement that we really deserve.
That's right. Yeah. And I hope you caught that if you're listening. So you're investing a portion of it, but you're in a sense, you're borrowing from another bank to fund a higher premium, which means that the value of your policy is getting bigger, but you're going to pay that off later because of the growth of the policy, the cash values in the policy, right?
That is correct, because the cash value of the policy has historically grown over any 15-year period, at least the minimum, outside of the Great Depression, which then I'll stretch it to a 20-year period, because besides the Great Depression, at least 1.7% greater growth in the performance of these policies versus the cost of money for borrowing. Right. And most of the time, it's been closer to 2.5. Yeah. So it's just making money on that arbitrage. It's the same idea as all these real estate investors. You're going to borrow money to invest. Yeah, that's what it's called when you get a mortgage from a bank in your real estate investment, and that's how you're going to make money, because your money is going to grow at a higher rate than the interest on your mortgage, and you're golden. And that's the idea.
That is the simplest way to really think about it. Is you can borrow money to invest in anything you want, and the key concept is you borrow at 5%, you want to make 7%. So you're making that 2% spread, which you said is arbitrage. That's the word that's used. That's the spread, okay? Now, the question is, what are you going to invest in to make that spread? You can do it in stock market or real estate or life insurance, there are 1,000 things, right? You've chosen life insurance, right? To have your clients borrow money to invest more cash, higher premiums in a life insurance policy that grows compound interest year after year after year after year after year after year. And oh, by the way, when you get when it matures and you want retirement income or whatever, that money comes out how?
Tax-free, baby.
Tax-free, baby.
Michael, I think you got it. Michael, you want to join my team?
That's right. Yeah. I need to be sound. I told people, seriously, we've been writing books for financial advisors for a long time who do something like this, not quite exactly, but pretty close. And I told them a long time, I said, dude, if I was not doing what I do today, I would probably be in your world, because I believe so wholeheartedly in permanent life insurance as a vehicle to build wealth, tax-free income, pay for college, pay for cars, pay for houses, I have access to capital that I'm really borrowing other people's money, not mine, to do the things, live the life, build the wealth, and pass it on to generations. But even do it now. We just opened 2 policies on my kids who are 23 and 27. You do
Mhm.
the math. You're a math guy. Do the math. What is that policy going to be worth in 40 years, 50 years? It's unbelievable.
The numbers will blow your
Yeah.
socks off,
So
especially when you add in the leverage. But I want to tell you something,
yep.
that you mentioned about that you could use borrowing leverage to invest in anything.
Yeah.
I want to tell you what this is one of the points that when you understand this, it's a whoa moment. You ready?
Okay.
A lot of people use leverage to invest in stocks. They call it margin.
Okay.
But there's a risk that if the market collapses and you didn't take this safe margin, there is definitely safe ways of doing it. I'm not saying there's anything wrong with it, but some people don't do it so safely. And then you could run into what they call a margin call and lose all your money.
Mm-hmm.
And another thing that is very commonly done is to invest in real estate. Now, well, the reason why it's very good, the investing in using leverage to invest in real estate, is because real estate goes up 95% of the time. And since real estate goes up 95% of the time, it's a very sound investment usually to use leverage to invest in real estate. The problem is sometimes you run into that 5% like now.
Yeah. Yeah, exactly.
And therefore, don't get me wrong, if somebody was structured properly in a safe fashion, they should be okay as well.
Yeah.
If you weren't as safe, you could be headed into some rough times right now.
Yeah.
The brilliance of using a life insurance policy is these life insurance policies are guaranteed not to go down in value from 1 year to the next. So they're 100% of the time, they will not go down 20%, like
Yep.
real estate or the stock market is going down right now. Therefore, I can't promise you that on the upside, you'll necessarily have the same upside that you could get in the stock market or even in real estate. But what I could tell you is you have much less risk on the downside. So that is why I love using leverage to invest in life insurance policies.
I do too. I echo that. I encourage people to reach out to you. The other aspect, though, the second book we ever wrote a decade ago was with a financial advisor who did a similar concept, right? And I wrote a chapter because I was helping him write this book. We wrote the chapter, and it's intriguing here because we wrote the chapter, and I titled the chapter "Why Compound Interest Doesn't Work." And you know it doesn't work for most people, because the secret of compound interest is you've got to leave it alone. But what people do is they start with money in the bank or investment or a stock, and then they pull it out to go buy something or to make an investment, and it drops in value. And so it never works. But with a life insurance policy, it absolutely works, because when you borrow, you're not borrowing your money. You're borrowing their money, and your money continues to compound year after year. Is that an accurate explanation?
That is an accurate explanation. It happens to be, you have to really show people a chart for them to really understand it and internalize it.
Yeah.
How, you continue walking up the steps and walking up the ladders of compounding interest. And by the way, forget what we're saying right here. You got to understand what compounding interest is. Go to Google compounding interest calculator and see if you put in $100,000 today. See what it's going to, let it grow at, 8%. See what it's going to be worth in 40 years, and you're going to be blown away. Yeah. So if you didn't start, the best time to start investing is, 10 years ago or so. Second best time is last year, but third to best time is today.
Yeah, it absolutely is.
So you got to go for it.
And when you think about it from a business owner perspective, okay, so we started policies on ourselves, my wife and myself, years ago. And there came a point in our business when things were not as good in the economy, and we actually borrowed some of that money from our life insurance policy to help fund the business for a few months. And then we were able to pay it back, and we kept going and growing because I had access to capital. And that's what I want my audience to really, really understand. When I just took a policy loan last month for $9,000, and I went online and clicked 3 buttons, and they mailed me a check. I didn't have to go talk to a banker. I didn't have to qualify, because it's A, my money, and B, they're contractually guaranteed they have to give me the money. where else can you do that from a business owner perspective? I don't have to go to the bank. And what Mel is talking about is taking this whole concept that we play with, borrowing from the bank and lines of credit, and kind of flipping it on its head to say, no, you can be in control. You can be in charge, and you can grow your wealth and have it tax-free, give it to the next generation, use it for your business to expand your business. Right?
It's your money. Do what you want.
But it's such a concept. So I'm going to ask you the question that I know people ask you is, if this is such a cool thing, this premium financing, why haven't we heard about this?
Okay, so you know that uncle, cousin, neighbor, the guy who's worth $30 million?
Uh-huh.
Ask him about it. He's
Yeah.
heard of it.
Yeah.
This is a concept that historically has only been available. The leverage side of investing in life insurance has only been available for the high net worth. And therefore, that's the people that have all the guys in suits chasing after them, including me.
Yeah.
But for the regular people, the regular guys like me and you earn a couple $100,000 a year, have businesses, etc. For us, not all of us know about it because our fathers didn't have access to this.
That's right. Well, and that's a great answer, because when you think about the high net worth people, or even in your own community, the bank presidents, let's say, okay, because they're pretty high wit, they all go to the same country club, they all talk, they golf together. They don't share those conversations with the vice presidents and the bank tellers. That's why you haven't heard it. It's been kind of an elite concept for elite people. And now what Mel and some other people have been able to do is learn about it and say, how could I apply this to somebody who doesn't have $38 billion, but we might have 100,000? What could I do with that? And the way you help people structure it, you can multiply that 100,000 by 2 or 3 times without putting yourself at too much risk, and actually pay it back over time. I mean, right? Did I say that right?
That's the beauty. That's, you almost nailed it. So as I said, Michael, I think we might be you on to our team.
Yeah. Yeah, it's definitely a concept that you've got to think about. You've got to have lots of conversations with people, because if it's new to you, I've been studying this for nearly 8 years in a variety of form. I've read the books. I've talked to multiple people like you, Mel, and that's why I'm fluent in it, because not only do I understand it, I use it, right? And I'm a big proponent. I want more people to understand this, because I get tired of business owners being strapped for cash, running up their credit card debts, not having access to capital to take advantage of something they need to, or just putting their family in financial turmoil because something changed in the market and they don't have money.
And I'll tell you something really with what the business owners, which I find very often, I find some business owners are so hyper focused on building their business. And I understand that's their baby. I get it. But they're so hyper focused, 60 hours a week in their business, 70 hours a week in their business. And what about what are you going to do for later on in life? What are you going to do for retirement? What are you going to do for, helping your kids with their down payment and their house and all these things that we would want to do? And they could afford it even. It's not even an issue. But they just they're putting money in the bank, or they're putting money into some boring investment that's earning 4%, just because I don't have the head to think of it now. But if they just sit down, and once again, it doesn't have to be me. You could be investing with any good investment and see what the growth would be for you to stop for a couple hours. I just need a couple hours away from your business to think about and to realize what you could do. The lost opportunity is depressing. When you see the people that had the money to put away, they didn't. They let it grow, and right now they're putting it in the bank. The banks, especially the big banks, are really ripping them off, giving them nothing whatsoever. It's hard to understand why anybody would do it, and the real reason is they just lack education.
They do, and they've chased the myth that we've all been fed. And if you're looking for an investment that where you will never lose your money, guaranteed, contractually guaranteed, where you will have guaranteed compound interest over time. And when you take money out of that investment, it's tax-free. I can't find another vehicle on earth that does it like an insurance policy.
Nope, there's nothing like it. There's only one concept which has some similarities, but there definitely is more risk for sure. I mean, the people that invest in real estate and know how to and have depreciation, and as well, are able to really 1031 from one property to the next. But you know what? If you're a really big boy, so to speak, and you're a really sophisticated real estate investor, you're in position to do that and be in charge. But if you're going to be a limited partner in these investments, you're not in the driver's seat. And you don't even know what risks are being taken.
And if you're in real estate and you want to really buy lots of real estate, try premium financing for a few years to build up your cash values, borrow your cash values, invest them in real estate. I mean, there's so many ways you can do this. Keep your money at work for you. And even if you said that margin, that arbitrage, even if it's just 1.5 or 2% difference that you're making on money, because you're borrowing from one place, you're investing in another, you're making money, everything's good. Life insurance is one of the simplest things to understand once you do a little bit of research and realize. Anybody who's listened to this conversation today probably knows more than most people who sell typical life insurance, because they don't deal in this world. And so that's why it's important to understand what Mel's talking about, to reach out and go to his website, reach out, have conversations. Where, Mel, as we start wrapping up, where would somebody go to just start learning more information? Because this is probably brand new for some people. Where can they go that you have that would say, here's your good next step?
Well, yeah, I think actually my website would be pretty good. It happens to be, it's going to be better in around 3-4 weeks from now. It'll be better because I'm in the process of redoing my website, because my website's like 6-7 years old, which according to my younger friends that I was speaking with, I'm not that old, but they said that 7 years in a website is 96 years in website years. So
I love it.
So time to redo it. But yeah, no, even right now, I think it's still good, but whatever. I'm taking their advice.
That's right.
and reflipping it. But financepremiums.com, that would be definitely a good place to go. And listen, anybody could just reach out to me. I'm happy to have a little conversation with them, see if it's the right thing for them. And I could always give them access to some, there's some licensed software, etc., that I'm willing to, help people out getting access to if they seem like it's for them.
Yeah, which is really important, by the way, because this is not I'm going to hit your website, I'm going to have one conversation, we're going to pull the trigger. Probably normally that doesn't work. I mean, I've spent years reading, thinking, talking, dabbling, trying until we figure this out. And there are a lot of questions you need somebody like Mel to just ask questions of, to see software like that, to run the numbers and to go, okay, what am I missing? And what you find out
I got to tell you something, but it's funny. You just said, I had a call a couple months ago from a guy, attorney, whatever, he's earns a lot of money. And he said, hi, is this Mel Lieber? I'm like, yeah, sure it is. Okay, I'm going to do one of these premium finance things. I want to put down $50,000 a year. I'm like, okay, fine. So let me just explain to you. He's like, listen, I don't really have time for this. My accountant said my accountant said he knows you and he has one himself. And if my accountant has one himself and he told me I need to do it, so would I fill out the application? I don't really care how it works.
That's great. Those are few and far between, but we'll take those all day long.
That's not every time. It was funny for the kind. It was more funny. I was pretty happy about it.
Yeah, I love that. Well, check it out. Financedpremiums.com. Is that right?
You got it.
Financedpremiums.com. Just check it out. Look at there. He's got ways for you to connect with him. He's got information, got some videos, different things. And just ask yourself the question of, how are you leveraging your money? How are you protecting your family, your income, your retirement, so that you'll never lose money? You'll capitalize on compound interest. You get tax-free income. How can you do that at an accelerated pathway using other people's money. It's crazy, but it's true. It works. And if it weren't something that were above board and ethical, Mel would not be on Expert Speak. So I can vouch for this process. We as a family have looked into it. We've researched it. I appreciate, Mel, you being here. This is the first time we've ever had this kind of a discussion on Expert Speak. I love it. I think we need to do more things like this because it's such a powerful, powerful financial tool for business owners and people. So thank you for being here, Mel.
All right, Michael, my pleasure. Very much enjoyed, and it was a great conversation.
Thanks, brother. Have a great day.